What return could Micron potentially yield us as an investor? Which of Warren Buffett's pupils have invested in the company, and what are the most important business fundamentals telling us? Stay tuned until the end to find out this and a lot of other valuable information. As always set with educational purposes and is not meant to be taken as financial advice. To set the tone, I want to start off with the investors which have invested in the company. Monish Pabrai, Li Lu, Guy Spier and Seth Klarman, all four of them are considered the current heirs to Warren Buffett and the value investing methodologies. 77% of Monish's US-based allocations are in Micron stock alone. During the latest Q4 quarter, he increased the position sizing by an extra 2%. Lilu has 5 stocks in his portfolio and Micron takes a 29.7% share of it, making it his biggest single stock position. Guy Spier has 11 stock positions and Micron is his 6th biggest position with a 5.3% portfolio share. Finally comes Seth Klarman, who has about 2.5% of his portfolio in this company. All of these investors have achieved between 15 and 20% annual returns for multiple decades, so it's no coincidence that this stock is in all of their portfolios. Micron is a leader in the memory chip industry. The chip semiconductor industry has a very big barrier to entry. This means it's very hard for new competitors to enter the market, and on the other hand, quite often there are semiconductor supply issues, resulting in often higher prices for the products the companies in the sector are selling. The main products Micron is selling are DRAM and NAND memory devices. NAND flash chips are blocks of non-volatile memory where data is stored. Unlike NAND flash, DRAM is volatile memory that must be powered on to hold data. The DRAM global market share is as follows. Samsung is a leader with 40.8% share as of Q3 of 2022, SK Hynix is second with 28.8% share, and Micron is third with a 26.4% share. What is interesting is that over the past 12 years, it is the second biggest slice Micron has managed to take. Only during Q4 of 2013 and Q1 of 2014, Micron had a higher percent. On the other hand, the NAND market has the following market share divide. Micron is on spot number 5 with 12.6% global share. Leader yet again is Samsung with a 33% total share. Comment if you want a stock analysis video for Samsung, and as most of you know, they are by far and away not only a leader in the semiconductor market. According to industry analysis, the CAGR for the memory industry is expected to be about 15% until 2029, so the industry will grow from $136 to $360 billion. This is quite the revenue growth. Anything above a 10% rate is considered very much above the average market. But we must not forget that these are expectations. As you can see on the provided article screenshot, as Morrison says, the overall global semiconductor industry experienced a 1.1% growth in 2022, which is below expectations and quite below the 26% revenue growth which was achieved in 2021. But the fact is that the world will become more and more digitized with the emergence of the Internet of Things devices, AI robots, and the emergence of still more than 3 billion people who do not have a proper access to technology. All of these future upcoming events will be a massive catalyst for the industry as a whole. Now that we know the state of the memory chip market, let's analyze Micron in more detail. The last 10-year average revenue growth per share per year for Micron was 10.2%, which is above market, For the last 5 years, the growth was 6.1% per year, which was below market, but over the last 5 years the market was extremely overvalued and Micron is a true value play, as we'll see in a moment. In times of loose monetary policy, most investors look to invest in more risky stocks like the ones in Cathie Wood's portfolio, so make sure to watch my analysis on the ARK Innovations ETF fund to see why we must not invest in growth stocks. From a debt perspective, Micron is extremely well run. The cash to debt ratio is 0.97. This means only with its cash reserves, Micron can pay off all of its long-term debt, as the cash on hand is $10.5 billion, while the long-term debt is $10.7 billion. The long-term debt to equity ratio is 0.22. From an efficiency perspective, Micron has about a 12.5% return on both its ROE and ROIC metrics, which are the two favorite metrics of Buffett. The price to book for Micron is 1.3, which means that for every $1 of equity, we pay only 30 cents extra. This means that our risk in Micron is very limited, as the current price is only 30% above the liquidation price for all assets of Micron. From an old school Ben Graham valuation perspective, looking at the debts and the book value pricing of Micron, the company is quite cheap. If we couple this with the fact that the PE for the company is 10.7, then I see a solid investment. Ben Graham always looked for a PB of below 1.5 and a PE of below 15. What I think he was missing though in his equations was the growth of the company. But in the case of Micron, even if we assume no growth and a stagnating business over the next 5 to 10 years, we still could have a solid return, as the earnings yield currently stands at 9.34. On top of this, we have a dividend of 0.78 and the company is buying back its own shares at a rate of between 1 to 3% on average over the last couple of years. This means our direct current yield return is over 10%, and with the indirect return we go above 10%. Here, if I had to be more precise, I would extrapolate the cash on hand from the market cap, as we're getting this for free. So from 64.4 I take out 10.5 and I get 53.9 billion. This is the real price I'm paying for Micron, and to find out my real yield I have to divide now this price by the earnings of the company, which are 6 billion. This gives me a PE ratio of 9, which means only my earnings yield without the dividend is 11.1%. From all aspects, Micron is a solid option for me personally. It has the backings of the greatest investors in the world, it has a big competitive moat, it has incredible debt management, it has good efficiency and a low valuation. With this, I end the video, so make sure to subscribe so you won't miss out any of my future content. Goodbye for now, and until the following video.